Welcome, everyone, and thank you for joining us for Cosigner Crash Course, What You Need to Know. Whether you're a parent, family member, or supporter considering co-signing for the first time, or you've already co-signed and want a better understanding of what that really means, you're in the right place. Today is about clarity and confidence. Co-signing is a big decision, and our goal is to help you understand both the opportunity and the responsibility so you can make the choice that's right for your family. Before we dive in, let me briefly introduce myself and why I care so deeply about this topic. My name is Kumba McGill, and I'm a relationship manager at Ascent Funding. I've spent over 5 years working in higher education, partnering with families and institutions across the country to help students access education funding responsibly. One thing I've learned is that co-signers often want to help, but don't always receive clear, straightforward information up front. My goal today is to make sure you leave understanding your options, your responsibilities, and how to protect your financial health. Let's start by setting the stage for what we'll cover today. This session is designed to give you a complete picture of co-signing, not just the approval process, but the long-term implications as well. We'll talk about why co-signers matters, the risk and responsibilities involved, best practices for protecting your credit, alternatives if co-signing isn't the right fit, and how Ascent supports families through the journey. By the end, you should feel informed, empowered, and confident in whatever decision you make. Let's begin with why co-signers play such an important role in the first place. Many students simply can't qualify for private student loans on their own, not because they've done anything wrong, but because they're early in their financial journey. When a co-signer steps in, it can open doors to approval and significantly better loan terms. That often means lower interest rate and more manageable payments over time. It's important to remember that co-signing isn't just about a yes, it's about setting your student up for a stronger financial start. And you're far from alone in this process. The vast majority of private student loans, approximately about 90%, require a cosigner. So how exactly does a cosigner influence loan approval? Let's go ahead and break that down. When you cosign, lenders look at your financial profile along with the student, your credit history, income stability, and debt to income ratio all help demonstrate lenders that the loan can be repaid, even if the student is still in school. A qualified cosigner can significantly improve approval odds, unlock better rates, and expand borrowing options. Common reasons students typically need cosigners because they're building their credit history. They may be under 18, have limited or no income while in school, or simply haven't had time to establish a financial track record yet. With that benefit comes responsibility, and it's critical to fully understand your responsibilities and risk in what you're agreeing to. Co-signing means equal legal responsibility for the loan. Once again, co-signing means equal legal responsibility for the loan. This isn't a backup role. It's shared ownership of the debt. If payments are missed, lenders can pursue either the student or the cosigner for the full balance, and credit reporting applies to both parties equally. The loan shows up on your credit report as your own debt and can affect future borrowing for major purchases like a home or a car. Default has serious consequences. If a student can't or doesn't pay, you're on the hook for the full balance. The good news is, when expectations are clear and communication stays open, most co-signed loans are repaid successfully. Think of this as a partnership, not a blind commitment. Because responsibility and credit go hand in hand, let's talk specifically about how co-signing affects your credit profile. Co-signing can have a positive or negative impact on your credit. It depends entirely on your payment behavior. Consistent, on-time payments adds to your credit mix diversity, can strengthen your credit profile and demonstrate responsible borrowing. On the flip side, late payments, default can significantly damage your credit score by at least 100 plus points. Collection activities appear on your credit report and affect future borrowing for major purchases. Even when the student is making payments, the loan still counts towards your debt-to-income ratio, which is why staying informed is so important. That's why best practices for cosigners and proactive planning make such a big difference. The most successful cosigning experiences start with clear expectations. Have honest conversations before signing. Who's making payments? How communication will work? And what happens if circumstances change? Autopay is one of the easiest ways to protect everyone involved. It helps avoid missed payments and often comes with an interest rate discount. And don't take a set it and forget it approach. Regularly reviewing statements together keeps surprises from turning into problems. In addition to good habits, there are also specific protections cosigners should look for to protect yourself as a cosigner. Being proactive doesn't mean you don't trust your student. It means you're being financially responsible. One of the most important things to understand is cosigner release. Many lenders allow cosigners to be removed after a history of on-time payments. Keeping documents organized, reviewing statements regularly, and understanding your lender's policy all help safeguard your financial health. At Ascent, cosigner release is available after just 12 consecutive on-time payments, which can significantly reduce long-term risk. Of course, cosigning isn't the right choice for every family, and that's okay. If co-signing doesn't feel like the right fit, there are still options. It's highly recommended that federal student loans should always be maximized first. They don't require co-signers and offer strong borrower protections. Scholarships and grants are another critical piece, and many go unclaimed each year. For example, Ascent also offers no essay monthly scholarships that you do not have to be a borrower to access. In addition to that, Ascent offers no cosigner loan options for qualified students, including credit-based loans based on your student's credit score and income. We also offer competitive rates for qualified borrowers. Our outcomes-based loan rewards academic performance rather than credit history. It also takes a look at your student's major and the school they are attending. No matter which path you choose, support matters, and that's where Ascent comes in. At Ascent, we see ourselves as more than a lender. We're a partner in your family's financial journey. From auto-pay discounts and flexible repayment options to free financial education and career-building tools through AscentUp. Our goal is long-term success, not just loan approval. AscentUp is a free support platform available to all Ascent borrowers. It's designed to help students succeed outside the classroom because academic success and financial success are deeply connected. Through AscentUp, students have access to financial wellness education, time management tools, clear exploration regarding their career resources, and job readiness support. This helps students build strong habits early, which ultimately protects both the borrower and the cosigner. The Bridge program takes that support one step further. It helps connect students to real-world paid internship opportunities. These aren't just resume boosters, they're pathways to income, experience, and career clarity. For cosigners, this matters because students gain work experience and career direction early and often better positions them to manage repayment after graduation. Before we move on to some commonly asked questions, I want to leave you with a simple cosigner checklist. Your cosigner checklist includes understanding your legal responsibility, reviewing your credit and financial capacity, communicating openly and honestly with your student, creating a clear repayment plan. Lastly, always ask about cosigner release and set up auto pay for on-time payments, which can potentially have interest discounts. If you take 10 seconds right now, you can scan this QR code on your screen to be able to have access to the checklist later. So go ahead and scan that QR code on the screen so you can have access to this checklist later. Co-signing is a meaningful way to support a student, and when done with clarity and planning, it can be a positive experience for everyone involved. We can now move on to answering some commonly asked questions, and if time permits, we'll take additional questions from the chat or Q&A box. The first question I see here is AscentUp something we have to pay extra for? No, AscentUp is completely free for Ascent borrowers. It's included as part of our commitment to supporting students beyond just financing. Another question here is, does my student have to use AscentUp or the Bridge program? Participation is optional, but highly encouraged. These tools are there to support students academically, professionally, and financially, which benefits both the student and the cosigner. Okay, I see another question. If I cosign, how can I stay informed about the loan over time? Both the borrowers and cosigners have access to online account portals where you can view balances, payment status, and statements. We always recommend regular check-ins so there's no surprises. What happens if my student struggles financially after graduation? If challenges arises, it's important to communicate early. Ascent offers flexible repayment options, and reaching out proactively can help prevent missed payments and credit issues. How does the Bridge program help with repayment answers? The Bridge program helps students gain paid work experience and career readiness before graduation. Students who secure internships early and get access to early career exposures often transition into full-time employment more smoothly, which directly supports successful repayment. Does using AscentUp affect loan terms or approval? No, using AscentUp does not impact your loan approval, interest rates, or repayment terms. It's purely a support and education resource. Okay. How soon can a cosigner be released from the loan? With Ascent, cosigner release is available after 12 consecutive on-time payments. Provided eligibility requirements are met, this is something we strongly encourage families to ask about before signing, especially for those who are doing loans outside of Ascent. Is co-signing always the best way to support my student? Not always, and that's okay. Supporting a student can also mean helping to explore federal loans, scholarships, budgeting strategies, or no cosigner loan options. The best choice is the one that aligns with your financial comfort and long-term goals. What's the single most important thing cosigners should remember? Co-signing is a shared commitment. When expectations are clear, communication stays open, and tools like AscentUp are used, it can be a positive and empowering experience for everyone involved. Okay, let me see if I missed any other questions. Okay. Okay, after a cosigner release, rate changes. It depends what type of rate you get. We have fixed and variable, right? So with the fixed, that's a set That's a set rate. With the variable, it depends on the market. So it's going to determine what you initially signed up for when you signed up for the loan. Let me go ahead and see if any other questions. Please go ahead and put it in the chat or Q&A box. Oops. Let me see. Okay. These are great questions, y'all. Can repayment start after my student graduates? Yes, it can start after your student graduates. We typically have a 9-month grace period, so it can. We have a variety of repayment options, and that includes deferment until graduation. These are great. Okay. If you have any additional questions, please do not hesitate to reach out to us. I can be reached at kmcgill@ascentfunding.com, or you can also go to our website at ascentfunding.com to see all our options within regards to cosigners. A cosign loan is a line of credit, yes, and it's going to affect both you and the student, positively or negatively. These are some good questions. All right. Well, if we do not have any more questions, I want to thank you all for joining us today. We know co-signing is a meaningful decision, and we're honored to be part of that conversation. Our goal is to help families move forward with clarity, confidence, and support. Please check out our website at ascentfunding.com, as well as I can be reached at kmcgill@ascentfunding.com. Thank you so much and have a wonderful rest of your evening.